So it's Thursday. They'll go off Thursday the 2nd.
They went off the board yesterday.
This is Alan Bush with the daily financial forecast for Tuesday, August 4th. Starting out with the stock index futures, we are seeing prices a little bit better this morning. Overnight, we did have some comments from the People's Bank of China indicating that they will be adding more economic stimulus to their economy. Also, there was another report indicating that China will spend as much as $161 billion worth in construction projects in an effort to support the Chinese economy. So even though the talk is that China's economy is slowing and they may not be able to hold the 7% growth target, it looks like China is ramping up their stimulus efforts. And this, to some degree, is being reflected in better stock index futures here and also overseas. Also, keep in mind, technically, in the S&P 500, there is a double top area coming in at the 21, 26, 25 level. In fact, to the tick, there's a double top there, meaning that anyone that is short will likely have their buy stop above that double top resistance. So I'm not sure how long it will take, but I do feel very strongly that ultimately we will be taking out that double top resistance in the S&P 500 futures. Now, moving over to the currencies, the dollar index lower for no apparent reason. Possibly it is that traders still a little bit apprehensive about being too long dollars, with last Friday's report showing that labor cost increased only 0.2%, and that is a record low. The guess was up 0.6%. So this is the lowest level as far as wage growth that we have seen since 1982 when records were first kept. So that may still be having somewhat of a negative impact on the dollar index. The big gainer, however, is the Australian dollar, trading sharply higher after the Reserve Bank of Australia at their policy meeting, leaving interest rates unchanged at 2% as expected, but the surprise came when the RBA indicated that they are, due to their lack of comment as they had before, indicating that they are no longer interested in pressuring the Australian dollar to lower levels. So the omission of a phrase about taking the Australian dollar lower was the catalyst that took the Australian dollar sharply higher this morning. Also, we have higher energy prices supportive to both the Canadian and the Australian dollars. Now, moving over into the interest rate markets, the possibility of a Fed funds rate increase at the December 16th, 17th meeting remains at 55%. That's the same as yesterday. A lot of cross currents in this market. The consensus view is that the Fed will raise rates, of course, that being a bearish factor, but some recent economic reports, as we just mentioned, that wage number coming in as weak as it did, quite a bit of a bullish influence. So a lot of cross currents in the interest rate markets. I think I'd stand aside there for now, but I would prefer to focus on the long side of stock index futures and also on the short side of the US dollar index. So once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland. And good trading, everyone.